Good morning, everybody. It's a real pleasure to be here in Boston with such gorgeous weather. Thank you for arranging it. And we're delighted to be holding one of our IIF Transition Finance workshops here in partnership with the Liberty Mutual Climate Transition Center. I'm Sonja Gibbs, Managing Director and Head of Sustainable Finance at the Institute of International Finance, or IIF. We are a trade association and think tank based in Washington, D.C., and we do a tremendous amount of work on sustainability and transition planning and so on, simply because all of our members around the world are so focused on these issues. I want to just say thanks to our fabulous co-organizers here at Liberty Mutual, Raki Kumar and her colleagues who are hosting us today. We're going to be hearing from a number of senior Liberty Mutual speakers over the course of the day. Really a great illustration of how a complex global financial firm is incorporating sustainability, ESG issues across all parts of the organization. So we at the IIF have held over a dozen of these workshops now in financial centers all over the world, and each has brought together a really fascinating cross-section of financial firms, policymakers, regulators, philanthropic organizations, academics, and other stakeholders in this sustainable finance ecosystem that we're building all around the world. They're each a bit different, you know. It's interesting. You in Boston are very obedient. You know, you came to your seats and sat down. The last one we had of these was in Milan, and it took 15 minutes to get people away from the espresso machines and sitting in their seats. So well done, you. And every conversation, you know, from Toronto to Tokyo has been different. And each has brought new insights to some of the most challenging questions that we're facing as an industry. How do we plan for the transition to a net zero global economy? How do we manage climate and transition related risk? And how do our transition plans translate to actual transition finance? And that brings up the question of how we define transition finance, and whether that's for climate solutions and new technology, companies that are already green, companies that want to transform their business models and have a plan in place to do so, or really challenging areas like managed phase out. We'll be talking about all these issues today. And of course, if you work in financial services, you care very much what your regulators are thinking about these matters. So you might have seen hot off the presses yesterday, we had a new report from the Central Banks and Supervisors Network for Greening the Financial System, the NGFS, publishing their stocktake of transition plans. So I think my colleague, Katie Rismanchi, was here with us today. Katie, you read the whole thing on the plane yesterday, right? What was it you said? Yikes? Yeah, something like that. There's a lot going on here. Growing regulatory scrutiny. So the chair of the NGFS, Ravi Menon, who also in his day job runs the Monetary Authority in Singapore, he said they are examining roles that supervisors can play in assessing financial institutions' transition plans and transition planning practices. That's a big statement. It's going to create a lot of activity across our industry. We are also very pleased to be partnering with McKinsey on these workshops and appreciate their time and insights and collaboration. So we've got a really full program today, and I'm just going to end with a little bit of scene setting here. So when we think about the landscape for transition planning, there's three basic challenges for the financial sector. Number one, we are not in the driver's seat here. Transition needs a whole economy approach. So how fast we get to net zero will depend mainly on the effectiveness of government policies, and not just for the financial sector, but across industries. Second, finding global consensus and alignment on financial sector policy and regulation around climate risk and transition planning is tremendously difficult. Anybody who works in government affairs, regulatory affairs, knows how hard it is to find international alignment. So fragmentation in this area is really, really challenging, especially in areas like use of the capital framework, disclosure, taxonomy, consumer protection. Different rules in different jurisdictions, it's very hard for global financial firms to cope. Fragmentation is also clear as major economies pursue nationally driven climate and industrial policies. You know, you talk about the US Inflation Reduction Act, the IRA, and the EU response to that, including the Net Zero Industry Act and so on. So a lot of competition to see who can attract the most climate investment. And that has global consequences. As wealthy countries seek to come out on top, it's going to be important to ensure we get enough climate finance for emerging economies as well. So all told, 2023 is really set to be the year of transition planning and finance. And one of the big challenges for our industry is also all the multiple sources of guidance on transition planning. Science-Based Targets Initiative, the Glasgow Financial Alliance for Net Zero, GFANZ, and increasingly our regulators. So with debate evolving at the global level as well, the IAIS, IOSCO, all of the alphabet soup of international standard setters and regulators, there is a lot going on in rules and regulation to do with sustainable and transition and finance. So it gives us a lot to discuss today, and I'm going to stop here, and I'm delighted to introduce Neeti Bhalla Johnson, who is President for Global Risk Solutions at Liberty Mutual. Neeti, over to you.
Thank you, Sonja, and the Institute for International Finance for co-hosting this event with us. We are just so happy to welcome you all to our headquarters here in Boston. And for those of us joining us virtually online as well, welcome to you. We are just thrilled to be a part of this important conversation that we're going to have today. Here at Liberty Mutual, we see a commitment to sustainability, and really to climate transition in particular as truly a once-in-a-generation opportunity for our businesses, for our customers, and for our societies. Now, as you probably all know, in the insurance sector, we see the impact, we actually experience the impact of climate change firsthand, as extreme weather events affect customers in many parts of the world in different ways. And we also see the limitations, frankly, of the current approach, Sonja, as you highlighted, that's being taken to address climate transition. Too simplistic and not taking into account the complexity and the nuance that is going to be required for us to really embrace the climate transition challenge ahead of us. So with this in mind, we founded the Liberty Mutual Climate Transition Center with the goal to advance the collective understanding, and that is really the key word, the collective understanding of climate-related risks, impacts, and resilience. Because our aim is to empower financial service professionals, policymakers, customers, and decision makers together globally to adapt and mitigate one of the biggest challenges ahead of us in working through this climate change issue. We are proud to co-host today's event with the IIF. This is actually our inaugural event under the center's banner, and so thank you for joining us for that. So let me touch a little bit from a personal basis, the complexity of this climate transition and give you a little bit of kind of where I'm coming from on this. I've spent most of my career as an investor. I was at Goldman Sachs before across banking and asset management and private wealth. And then most recently, I led our Liberty Mutual Investments business as the Chief Investment Officer, and then moved over really just about 2 years ago to lead our Global Risk Solutions business, which provides risk solutions and insurance products for mid-size and large customers, businesses. I also bring somewhat of a global perspective, if I can say that, to the conversation. I was born in India. I grew up in Kenya. I've lived in the UK. I've now lived in the US across different states. And if there's one thing I will tell you, having seen these different parts of the financial industry and how different communities are going to experience this climate transition, it is two things. One, that while different sectors and regions have unique needs, what's going to be really critical and top of mind for every community, every country, every region, every business, every person, is that the transition happens in a just and responsible manner. And that is the challenge ahead of us. And that is frankly why I am so excited for this conversation today, which brings together representatives from the public and private sector. From the Massachusetts Governor's Office, Melissa, thank you for being here, in the Department of Energy. Dr. Chan, thank you for being here, to banks, investors, and insurance carriers alike, all in one room for a conversation on climate transition planning. It's really clear that we will need more pragmatic conversations like the one we are going to kickstart today. After all, and you mentioned one of them yesterday, Sonja, but I think we can all say that the world, the regions, countries are not all moving at the same pace here. We just saw coming out of the G20 conversations, didn't we, that India and China want multiple energy pathways. They want countries to pursue transition policies that include coal. Every region is doing things in a different way to meet their unique needs, from energy mix to existing infrastructure to regulatory transition planning. One that is informed, and this is going to be key, is why we believe businesses need a pragmatic approach to climate transition planning. And I'll touch a bit more on what we mean by pragmatic approach. In our view, our belief is that a pragmatic approach to climate transition planning needs to be informed by economic and geopolitical realities married with technological and scientific insights. Transition planning that does not consider or is not aligned with country-level climate policy runs the risk of actually being counterproductive and potentially increases the social cost of the transition. Pragmatic transition planning requires a shift in thinking. We have to reimagine the global economy. Some in the financial sector have currently adopted a one-size-fits-all approach to climate transition, believing that broad commitments without clear pathways to execution are the best starting point, that we can manage the transition by focusing on portfolio-level emissions. But I will tell you, having seen the inner workings of the different parts of the financial sector, this is not the way forward. Instead, we need a systems-level approach, one that considers macro factors on the horizon, such as policy, economic, and technological changes. These insights, along with sound climate science, is what will aid us in planning for the future global economy. And this will include considering the unique needs of vulnerable communities who very often are forgotten in this conversation. Let me just take a moment, because I think this is really important and a big part of the thesis behind why we've pulled together this esteemed group together. I want to differentiate between the transition planning process and transition plans. Those are two different things in our view. A pragmatic transition planning process informed by economic and geopolitical realities married with technological and scientific insights can be beneficial in helping us all conceptualize the transition risks and the opportunities that can then be integrated into business strategy. On the other hand, the development and disclosure of long-term transition plans, in our view, is frankly concerning because it can create litigation risk for companies and actually become a derailer to the just transition that needs to happen. Why do I say that? Our current climate models are still in their infancy. I think we can all acknowledge that. And any 10, 20, 30, 40-year transition plan will need to be updated and changed based on socioeconomic and technological realities. And so that is why today's event will cover 3 topics that will impact transition planning in the near future: technology, policy, and climate litigation, and the need for public-private partnerships to truly fund this transition together. So let me break these down really quickly before I turn it over to Ed. So let me start with technology. Given the unknowns of technology innovation, we don't know with certainty today which emerging technologies will successfully scale, or if new methods will be discovered. This uncertainty also means that it's hard for new technologies to get funding appropriately. As an insurer, we believe we play an important role in de-risking this energy transition by lending our expertise as risk managers to advance new and emerging climate technology adoption, like we recently did with our investment in green and blue hydrogen energy projects with our partner Marsh. I will admit that it's been a surprise to me as I've made the transition from the investing side to the insurance side, that actually insurance is a bit of an afterthought in the engagement process by policymakers and decision makers alike. But when it comes to transition, please know that we see that bringing insurers into the planning process early can actually help mitigate the risk and allow for faster adoption, implementation, and operationalization of projects. Oh, and by the way, it also improves the risk-return profile for investors, and that's a good thing. Our second panel will discuss climate policy, which our research shows is the biggest source of transition risk facing companies and actually being ignored in the process at this point. We will also focus on litigation risks. One fact, the Geneva Association has found that climate litigation is rapidly becoming a global issue. Between 1986 and 2020, there were over 1,700 climate litigation cases worldwide. More than half of those have been brought since 2015. So the pace is accelerating. Climate litigation may serve as a disincentive in that it diverts a company's attention and resources from working on the actual responsible transition that we seek. All you have to do is look at what's happening to Royal Dutch Shell. And finally, today's discussion won't just highlight the challenges, but also the opportunities for more innovation, collaboration, and partnerships between public and private sector to support this transition. The one area of focus in the climate transition discussion that deserves significant attention is the need for adaptation or resiliency. What do I mean by that? Increased resiliency is needed to withstand the increased physical impacts from extreme weather events. We know our infrastructure was not built with this level of climate transition in mind. We can see as an insurer that even simple actions can make our businesses, buildings, infrastructures, our communities more resilient. The National Institute of Building Sciences reports that adopting the latest building code requirements, so we don't actually have to go put a new building code in place, just adopting the existing building code requirement saves $11 for every dollar invested. That's a great return on investment and doesn't require us to wait. In the short term, climate transition is about mitigation and about resiliency or adaptation. So we need to incentivize companies to invest in climate adaptation as part of this transition effort. Because the one thing we know for sure is that physical climate risk is going to increase resiliency and save lives, save communities, and save businesses. So I, for one, am really excited about today's event and what more conversations like these can do to help us better plan for the climate transition. I leave you with this. I challenge everyone to think, what can we each take away from today's conversation that might challenge or change some of the planning underway at the policy level, at the regulatory level, at the business level, for the better? After all, tackling a big issue, possibly the biggest issue, like the climate transition, will require the constant evaluation of the pathway ahead, the sharing of insights, more collaboration, and most importantly, a willingness to evolve our current thinking. That way we can all move forward together into a more sustainable future.